the Nigerian equities market is set to close the third quarter of the year on a positive note, with analysts attributing the sentiments to the MPC's first rate cut in 5 years, which drove renewed interest in the equities market. Muktar Mohammed, analyst at Assar Investments, joins me now to unpack the performance seen under this quarter and then the outlook for the rest of this year. Muktar, thanks a lot for joining us on the show today, and good to have you back in the studio.
Thank you.
We're seeing investors doing a bit of balancing here when we're looking at bargain hunting and also positioning cautiously ahead of the close of this quarter. But walk us through the highlights of the market movements in the third quarter of this year. The biggest takeaways for you?
Yeah, the biggest takeaway, I think, is the insurance stocks after that policy document from the federal government.
Yeah.
We saw that huge turn. I think them and the consumer goods were the one that made the highest return in the third quarter of this year. So for me, that was the biggest takeaway from in the market in the third quarter. And also, we continue to see the recovery in the consumer goods also in the third quarter. That was huge. And I mean, when we talk about the third quarter now, the result for the third quarter itself is not yet out, but you're looking at the half year towards the third quarter. For me, that has been huge. You saw this recovery from the lack of Nestle, PZ, and also Nigerian brewery Guinness. Nigerian also, you can see that lift is one stock. You could also begin to see the lift in Aradel also in the third quarter from that low of about 480 to about 500, and at the time 582 at the time I was leaving the market to come to the studio. So definitely that tells you the kind of, for me, those are my biggest takeaway in the third quarter, and these are largely driven by fundamentals. When I mean fundamentals, you talk about the policy from government that was driven also by the fundamentals of those companies, especially the insurance and consumer goods are my big takeaway for the third quarter.
And in terms of market capitalization, the size here now, the movements, what do you make of the numbers?
Well, in terms of market capitalization, I am not so much a big fan of market capitalization, because sometimes you tell people about the market capitalization and then you are looking at your own individual equity as really even match up to market capitalization. But by and large, market capitalization is to tell you the depth of the market and in terms of liquidity of the market. And you can but say that that was also very good for the market, especially the last week. We had a surge in trade for about 480%. For me, that was huge. That tells you there a lot of confidence are still there in the Nigerian market. And the market capitalization at the beginning, I think at the start of the second quarter of the year, we were struggling that 99,000 mark. And everybody thought that could just be the only point that it would be, and then you see it now retire. But instead, we've seen it goes to about 100 and something. So definitely, for me, that's a big take in terms of the market capitalization.
And then when we're also looking at some of the developments that is also shaping the market at this moment, we're looking at the prospect of increased liquidity flows into the equities market on the back of the more accommodative interest rate environment. Now, your take around the MPC's move and then the layered impact when we are looking at sectoral sensitivities, because at the end of the day, we've also talked about the volatility in the market from an inflation to FX perspective. Your take around how these moves by the MPC may impact the subsectors?
David, the funny thing is that we are not seeing those impacts like we thought we would see. Ordinarily, when you see a rate cut, you definitely will see the stock market goes bullish. But in this case, we've just seen...
so the market is not giddy about this?
It has been priced in. You know, we've been expecting this rate cut for a while now. I, for one, didn't think the rate cut will come in this meeting. I thought maybe the last meeting for the year, November, then you could see the rate cut. So again, that rate cut comes also with its own challenges in the sense that we are trying to also to attract more foreign portfolio investors, especially, you know, they are more comfortable with our fixed income market space. And so when you look at what has happened globally, you see rate cut in Angola, Ghana, American, Europe. So definitely when you look at the return, the fixed income return here in Nigeria is still very, very huge. And so we will still be able to attract those portfolio investors, especially into the fixed income space. For the equity market, Dave, the challenge with the fixed market is that we have more of retail investors. So retail investors are looking for good entry point, good exit point. We've not had those institutional investors locally or foreign. You can't just see one of the big players, the institutional investor we have in Nigeria, just exited the equity market through its selling its stake in Arade. That tells you where they look for good entry point and good exit point. Yeah, so for me, I think it has been priced in, but I like what is happening. There's stability in the FX market. So definitely we might just see those foreign portfolio investors coming in. They don't want to play the Nigerian equity market. And again, the fundamental of the market is still strong. If you look at, when you talk about key sector, the banking sector, this is going to be the last half of the recapitalization. So a lot of activities will be shining there.
I like the fact that you touched on the banking sector as well, because one of the stories that we've also seen impact the market is also the CRR adjustment as well. That's on one hand. And then the race to recapitalization, according to the Central Bank of Nigeria, 14 have already met the minimum requirements. Your take around movements we should also expect in the banking stock. And when we look at sales exits like that of ETI and other names, FCMB also has a couple of news fillers coming through.
Yeah, FCMB has a good news filler coming through, almost like meeting their capital base, converting a loan of 23 billion into equity. So that also is huge for them. And so that also, but David, where I'm seated, I don't think any of those banks will have challenges meeting with those recapitalization. I think the fundamentals are there, the market is there. You just talked about the CBN also giving them a smooth landing till the end of the capitalization, whereby they can convert some of their loan into equity that will also be able to stand in the to be able to meet liquidity ratio. That's what FCMB are just taking advantage of, converting a loan into equity. So we might see that going towards. But again, if you look at the bank, especially the tier 1 bank, I don't think any of them will have challenges, because again, you have to look at their shareholders fund, even their recapitalization fund. Is a company like Zenith Bank has a shareholder fund of about 4.5 trillion, and then you are looking for a recapitalization of just 500 billion. So definitely, I don't think there's any challenge as recapitalization will really pose for the bank. But I think the bigger push will be how they're able to implement their strategy with the kind of liquidity that will be in the system. You talk about the cash adequacy ratio, which again is under mint of the CBN, giving some of this bank soft landing CFP coming down by 5%, and also, but again, what they did with one hand, they tried to rebuild the TSA. You can only use
already been counted off for time. But my favorite question to you, in terms of buy, hold, sell, what are your recommendations, and how bullish are you about the outlook for the equities market Q4? Q4
bullish, buy Arade, buy Assess, buy the consumer goods also. And I just think for the banking stock as it stands today, Access Bank remain the cheapest. And then if you are looking for good yield, in terms of good dividend yield, VAR fixed income space, and then you're looking for a twins dividend, then you won't take your eyes off UBA. Despite the 25 copper payment, they still have a good dividend yield of about 11%. Okay, we'll leave the conversation here for now. It's always a pleasure speaking with you. That was Muktar Mohammed, analyst at Assar Investments.